All right, so we're going to be talking about Robinhood. So Robinhood, obviously for those of you who have been living under a bridge, Silicon Valley-based stock and cryptocurrency investing apps, very, very popular among younger retail traders. And that's because it's got a fairly slick and user-friendly interface, along with zero-fee trading. But Robinhood appears to be scrapping its UK launch and scaling back its plans of global expansion, right? No Empire theme song here for Robinhood. Now, an email went out to about 250,000 UK-based users that were on the waiting list. They've been signed up since early last year, when Robinhood first acquired a broker's license from Britain's Financial Conduct Authority, the FCA, in April 2019, which would grant them the ability to launch their product in the UK. We've previously talked about the FCA with a regulation on margin trading as it applies to cryptocurrency. Now, in that email, Robinhood wrote to these disappointed Brits that, quote, "A lot has changed in the world over the past few months, and we've made the difficult decision to postpone our UK launch indefinitely," end quote. They have decided to invest all of their funds with Goldman Sachs to manipulate the US election instead. That was not in the email, but maybe I was the only one who was CC'd on it. Now, the email went on to state that Robinhood will be closing the waiting list, not just postponing, but closing the waiting list and shuttering their official UK website shortly. So that's dead in the water. Like, that's gone. That's not postponed. That's done. The Robinhood app has been on somewhat of a breakaway success. I've watched this over the last 3 years. The app managing to attract even more users to join and trade amid the pandemic, amid the market crash. But the speculation is rampant now that consumer protection concerns are at the heart of why they have now pulled back dramatically on their plans for global expansion into new markets. I'm going to highlight this. Look at this New York Times article, bastion of truth and solidarity in the United States. But stories like this piece from the New York Times highlights how retail traders, can very easily log on to the platform and proceed to make complex trades. But most of them, of course, are going to lack an understanding about what products they're trading, what processes they're doing. And this often puts new traders and customers, Robinhood's customers, at risk of losing far more than they bargained for, which was illustrated, of course, by the recent tragic suicide of a 20-year-old college student from Illinois. Despite that, popularity has surged in recent months on the back of the global lockdown, with stimulus checks sprinkling money around as startup capital to aspiring traders, and budding traders have flocked to the platform to the tune of 3 million new users in the first quarter of 2020 alone. And the data suggests that it's been mostly millennials joining the platform. Now, in June, Robinhood found itself in hot water when the aforementioned Alexander Keynes of Illinois found himself underwater to the tune of $730,000. And this was due to trading put options, right? So selling naked puts. And although Robinhood has refused to comment on the specifics of that particular situation, it is very likely that that figure did not represent uncollateralized indebtedness at all. Instead, it was a temporary balance until the stocks underlying his assigned options actually settled into his account. But unfortunately, because we're talking about individuals that do not have an understanding of the markets, that do not understand how P&L works or how these contracts and options, which are contracts, are calculated and work, this tragedy forced Robinhood to make major changes to its platform, particularly when it comes to their options trading, because many new traders were getting themselves into a lot of trouble by putting on positions into complex investment products that they have no formal training in. Options are not easy. They're not simple. Now, one reason we're highlighting this story today is because education is something that we take very seriously here at Cracking Cryptocurrency. As we recognize how many pitfalls await new traders just entering the space for the first time, many of us in the community have started at the bottom and made costly mistakes or approached markets that leave us feeling burnt out. And so it's very important to point out how apps like Robinhood, while they may be very convenient and engaging to use, can get inexperienced traders into a lot of trouble. And there's no difference in cryptocurrency either. Now, one such trader highlighted in this New York Times piece is Richard Dobatz. He's a Navy medic from San Diego. He was in his late 20s when he dived headfirst into Robinhood in late 2017, obviously attracted by how easy it was to buy and sell stocks, and seemingly, as I said, for free, zero commission. Now, describing in his story how the one-click trading, how the features like falling confetti alerts and emoji-filled notifications made it feel like a mobile game just straight out of the App Store, like you're playing Candy Crush. This is what mobile trading can do. This is why I'm kind of against the concept. Now, as unbelievable and irresponsible as it sounded, he funded his Robinhood account with $15,000 utilizing credit card cash advances. And he began cranking up how much time he spent on the app, putting more time in front of the terminal, which of course means you're going to be taking trades more often. And of course, inevitably, after a little bit of initial success, he ran into a string of losing trades. When that happened, instead of admitting he was wrong and figuring out some way to pay off his debt and get back to status, he borrowed against his home using the value of his home as an equity line of credit to the tune of $60,000 in order to buy and sell even more speculative assets and options, hoping to dig his way out of a financial hole. Over the next 2 years, he rode the Trump-fueled stock market euphoria to new highs, and his account balance did eventually swell to over $1 million. Success story if ever there was one. But once turbulence hit the markets in the wake of the COVID meltdown, Richard was left unprepared. His account was nearly wiped out, right? This article says his balance today shows just under $7,000, which is a significant amount less than the principal that he owes in the first place. And his wife, likely on the verge of divorce. She told the New York Times that he wouldn't eat when he was deep into trading at night. He couldn't sleep. And when he did, the stress would give him nightmares. Now, part of Robinhood's success is in appealing to a younger generation of aspiring American traders. And that's thanks in large part to the Silicon Valley playbook of behavioral nudges and push notifications via the mobile app. And this has drawn inexperienced traders into the riskiest assets available. An analysis of industry data shows that Robinhood users traded the riskiest products at the fastest pace than any other retail brokerage firm. That data went on to show that in the first quarter of 2020, Robinhood users traded 9 times as many shares as E-Trade customers, 40 times as many shares as Charles Schwab customers. Shout out to Charles Schwab. Robinhood traders also bought and sold 88 times as many risky options contracts as Schwab customers. Shout out to Schwab options. Now, that data went on again to show that trading by small investors usually results, but this is known to most individuals, usually results in poorer returns and greater losses, and smaller retail investors fare even worse when they get involved in options. This article dives into Robinhood's system failures and service outages. We've covered those before as well, and those seem to occur unusually often. Insiders at the company told the New York Times that they felt Robinhood was not doing enough to support customers or provide adequate guardrails at times of system trouble. Like the young Illinois man whose life ended tragically after his stint on Robinhood, the average customer of Robinhood is young, just 31 years old, and half of their customer base has never traded before joining the platform. So, in other words, babes to the slaughter or sheep to the shearing. Now, employees of Robinhood revealed to the New York Times that some customers were so disgruntled they even traveled to Robinhood's California headquarters in order to air their grievances directly to the company. Now, the company has since grown concerned enough that apparently they've even installed bulletproof glass at the front entrance and stepped up security, which is always a good sign that your consumer base is happy with what you're doing as a product provider. Now, at the heart of Robinhood's business model is an incentive to encourage more trading, more trading, more trading. Even though Robinhood doesn't charge trading fees, it still earns more if their customers trade. And that's because they generate revenue through a fairly complex practice known as, quote, payment for order flow, end quote, right? So each time a Robinhood customer trades, Wall Street firms actually buy or sell the shares and determine what price the customer gets. They act as the broker-dealer in this sort of pseudo-ETN system, right? Those firms pay Robinhood for the right to do this because they then engage in a form of arbitrage by attempting to buy or sell the stock for a profit over what they gave the Robinhood customer. So they're taking advantage of your order flow, utilizing high-frequency trading, utilizing the mass of their orders or their overall position sizing, and scraping pennies. They're scalping. This is how the professional firms do this. It's not a new practice. Retail brokerages like E-Trade and Schwab operate like this too, but Robinhood is making significantly more than those other established retail brokers do for each stock and options contract that they send through the professional trading firms. And just how bad are Robinhood customers getting fleeced? Well, these next figures might shock you. I've never had the opportunity to say that on a live stream, but yeah, this might shock you. So data shows in Q1, let me see if I can pull this up. All right. So in Q1 of 2020, for each share traded by retail customers, Robinhood made 4 to 15 times more than Charles Schwab. brokering the same deal. That means for every dollar in the average customer's account, Schwab made about $195 from trading firms, while Robinhood made $18,955. Now, this is likely because professional trading firms believe they can score significantly easier profits from the trades Robinhood customers are putting on compared to the more sophisticated retail traders that are on platforms like E-Trade or Schwab, particularly Schwab. Shout out to Schwab. So these are all things that new traders need to keep in mind. Must keep this in mind. And it highlights the importance of education and a professional approach, because whether you're in cryptocurrency or traditional markets, it is a whirlpool of sharks out there. And having a professional approach with a serious risk management strategy, these are critical to new traders approaching the space casually or otherwise. Of course, these are the things that we focus on that are the mainstay of our educational content at Cracking Cryptocurrency. Obviously, the concepts, strategies that are in the Pathways to Profit course. And again, the first thing that individuals hear when they walk through the door is risk management and emotional discipline and systems trading, right? Trading with a system, knowing exactly what you're doing and educating yourself. I recently began trading on FTX and I spoke about that. The first thing that I did was I exhausted reading all of their documentation, Whenever I put money somewhere, I want to make sure that I have read all of the fine print and I know exactly how the system operates. That's often how you can find an edge, and it's how you can prevent yourself from being on the wrong side of a significantly bad movement. So, as always, trade safely. Leave your comments down in the comment section down below. Thank you guys so much for